So thanks for joining us for today's webinar. This is actually the first in our series for 2021, and we're going to be focusing today on the key to renewable energy and looking at battery technology, which is obviously something that's been really topical over the last few months. And my name is Gemma Weeks, and I'm a business development manager for ETF Securities, and I'll be providing this update today. So before I start, I'd just like to ask everyone to take note of our disclaimer. So please do note that any advice given in this presentation is general in nature. This presentation does not take into account your personal objectives, financial situation, or needs. And so we do recommend that you should seek independent financial, legal, or tax advice before making any investment decisions. And while you're reading this as well, just a bit of housekeeping. So there are a number of handouts available for you to download. So that does include a copy of today's slides. It also includes the fact sheet and the product flyer for our ACDC battery technology ETF, as well as a recent white paper on battery technology and the investment case there. Finally, I am also happy to take any questions. So I will leave some time at the end of the webinar for a bit of a Q&A, so please feel free to shoot those through. You're also very welcome, obviously, to give us a call or send us an email if you prefer to talk to someone directly about those. So looking at the agenda for today. So as I mentioned, we're going to be focusing on the key to renewable energy and the battery technology thematic. And I'm going to look, first of all, at this shift that we're starting to see towards clean energy and renewables, and how battery technology is really fueling this change. I'll also have a look at the growth of electric vehicles, which is one of the key drivers behind the recent battery growth and demand, and the future growth as well. And then we'll also look at the battery value supply chain and how you can actually invest in and access the battery technology market. So, as some of you may already be aware, if you've been following the clean energy and battery technology markets, you'll have noticed that 2020 was a really great year for growth in this market. And we are starting to see a bit of a turning point here and an acceleration in the growth across this sector. And that can really be put down to three key factors that are the three behind the drivers of this growth. Now, the first is government and company policy. The second is consumer attitudes and behavior. And the third is disruptive technologies. And what we're starting to see is these three factors are all combining to drive this growth across the clean energy market. And I'll talk a bit more about each of these factors throughout the presentation as well. So if we take a look back at last year, what we saw in 2020 was that despite all the COVID-19 lockdowns, renewables actually defied COVID to set new records for growth. And actually at the start of the pandemic, we did see early forecasts suggesting that renewables would decline based on supply chain disruptions and people not being able to get into the factories. But actually what we saw by the end of the year was that renewable capacity grew by 4% globally. And that was driven primarily by the US and China. And of this growth, it was new wind and hydropower additions that accounted for almost 90% of the worldwide increase. And if we look at the US and China specifically, wind and solar additions increased by 30%. And overall, despite all those supply chain issues and the manufacturing disruptions, we did see that overall increase in the manufacturing of renewables, particularly as the year went on. And if we look at the electric vehicle space as well, whilst the global pandemic saw gas-powered vehicle sales fall by about 15%, electric vehicle sales actually continued to rise by more than 30%. So if we now look at what we can expect to see this year in 2021, there's really two factors that are expected to drive the acceleration and lead to the fastest growth that we've seen in the clean energy market since 2015. So the first is that this year we should see the completion of the majority of those projects that had to be delayed last year, obviously due to the pandemic's disruptions. And the second is a really important factor, and that's the continuing fall in prices and the continuing and actually increasing amount of policy support that's really leading to a robust pipeline of clean energy projects. And that policy point is really important because when we do start to see government backing and government policy behind a thematic, that's when we really start to see something moving from, something that could just be considered a short-term fad or a phase to something that's actually more long-term. So what we call a sustainable megatrend. So this slide here is looking at the growth that we can expect to see in 2021 and where this growth is really coming from. So India is actually expected to be the largest contributor to the renewables upswing this year. And they're actually expected to double their renewable additions this year from where they were last year. And that's really due to a number of wind and solar projects that had to be delayed last year due to COVID-19. They'll be coming online this year. So that's going to see a big boost there. And if you're looking at the chart on the screen here, India is actually the second bar from the top. So you can see the growth there in 2021. Now, the other area that's expected to drive growth is Europe. And again, looking at the chart, Europe is the block just below India, so the third block down. And we're expecting Europe's growth to really jump in 2021. And that's sort of primarily as a result of utility scale solar and wind projects, particularly in France and Germany coming online. And Europe is expected to see a lot of growth because of the policy support from the different members of the European Union. And that's all in place to try and meet the European Union's 2030 renewable energy targets. And also further adding to the growth is the fact that the EU is actually providing a lot of low-cost financing, and grants are available as well, just to help ensure that these targets do get met. So if we now take a look beyond 2021, and we consider the long-term forecast for the clean energy markets. So we can expect that cost reductions and sustained policy support will really drive strong renewables growth well into the future. And that's going to be fueled by the demand from more climate conscious investors. And actually, interestingly, in most countries today, solar and wind are already the cheapest ways of adding new electricity capacity. And solar actually offers some of the cheapest electricity in history. So in those countries where they do have the resources and the money available to implement wind and solar farms, these renewables are going to start to replace existing fossil fuel plants. And over the next 5 years, renewables are expected to account for 95% of the net increase in global power capacity. So we're really starting to see this shift away from fossil fuels and towards renewables and clean energy. So total installed wind and solar capacity is set to surpass natural gas in 2023 and coal in 2024. And solar alone is going to account for 60% of all those new renewable capacity additions over the next 5 years, with wind providing another 30%. So by 2025, just in the next 5 years, it's expected that renewables will overtake coal and become the largest source of electricity generation worldwide. So within just that 5-year window, renewables are going to be supplying 1/3 of the world's electricity. So it's a huge amount of growth that we're seeing in this market. So with this slide, I just wanted to reiterate again how important policy momentum has been on this shift towards renewable and clean energy. So we've seen that recent economic stimulus packages following the pandemic are really helping to give an extra boost to this growth. So there's been an estimated $108 billion globally that are targeting economic growth in clean energy. And this is actually providing support by helping to fund new renewable projects, new battery grids and electric vehicles, and all those different aspects. So as well, the EU's economic recovery plan is expected to contain over $300 billion of climate-related spending. So then if we look more long-term at policy stimulus, some of the most important policy drivers are the net zero emission targets that have been announced by governments around the world. So we have seen already the EU and as I mentioned, several European countries really targeting net zero emissions, and they're targeting those levels by 2050. And they're also looking to cut their emissions by more than half by 2030. More recently, we've seen the likes of Japan, South Korea, and China all following suit with similar targets. And then obviously most recently and hugely significantly just this year, with Biden winning the presidency over in the US has obviously now come on board, so they've re-entered the Paris Agreement, and they're aiming to eliminate net emissions from the energy sector by 2035 and reach that overall carbon net neutrality by 2050. So as we see more and more of the world's superpowers commit to fight climate change and reduce their carbon footprints, the demand for this clean energy and this renewable energy sector can really be expected to grow quite significantly over the next few decades. So what does this all have to do with battery technology? Why is this shift to clean energy so important for this market? Well, energy storage and battery technology really hold the key to renewable energy. And that's essentially because solar and wind energy really depend on certain weather conditions. So obviously solar works when it's sunny and wind works when it's windy, but therefore they can only deliver intermittent power. And often that actually doesn't coincide with consumption demand. So if you think about it, most homes use the most energy in the evening, and obviously that's when a time when there's the least sunlight. So batteries really offer a solution to this issue by storing the excess energy during those times of high supply, which can then be used when demand increases. Now, batteries essentially solve then one of the biggest reliability issues of renewable energy, and they play that vital role in making it a really valid source of energy and enabling that switch to renewables. So batteries help to remove this issue of the imbalance between supply and demand. So therefore, they really hold that key to expanding our use of renewables and speeding up the transition to a carbon neutral world. And that's why we expect this huge increase in demand for clean energy that's predicted over the next few decades is going to have such a big impact on the performance of the battery market. So if we look at the forecast for grid storage, and those are the types of batteries that are used to store these renewable energy sources. The grid scale battery storage market is expected to grow by a compound annual growth rate of 22% from 2019 to 2027. And substantial investments and developments in renewable projects, in those renewable projects are changing the technology and really driving the cost of lithium-ion batteries down, which is then obviously helping to further increase the demand for this grid storage. So just to give you an idea of the size of some of the grid storage projects happening globally at the moment. So California is in the process of building the world's largest lithium-ion battery. And that's going to be over 400 megawatts with the ability to power over 300,000 homes by mid-2021. And they're actually looking at further increasing this project later in the year as well. But you'll see around the world, there's plans in Florida for a 409 megawatt battery system, plans in London for a 320 megawatt battery system, plans in Lithuania and Chile as well for slightly smaller ones. And that's just a few examples. You know, these are projects that are continuing to develop all the time, all around the world. But as many of you will already be aware, Australia is actually currently home to the world's largest lithium-ion grid battery. So that is the Hornsdale Power Reserve out in South Australia. and that was actually built by Tesla. Now, the Hornsdale Power Reserve can provide 185 megawatts of electricity. So it does bring reliability to the state's grid, but that just gives you an idea of the size and the scale of some of these new projects currently under development around the world. So that one in California and Florida, they're both going to be twice the size of the Hornsdale Power Reserve. But it's been hugely significant for South Australia. It provides that reliability to the state's electricity grid, and it's really saving consumers money as well. So it's saving around $90 million per year. So the next area to focus on then is the growth in the electric vehicle market. And as this market has really been the primary driver of growth in the battery technology market so far, of course, it is expected to continue to play a significant role in changing the battery technology landscape going forward as well. So the reason we're seeing demand for electric vehicles is that obviously they produce significantly less greenhouse gas emissions. So they're really helping to slow the effects of climate change and of course reduce air and noise pollution as well. And quite an important aspect in the future will be if the electricity that we use to charge electric vehicles also comes from renewable energy sources, rather than obviously using electricity generated by fossil fuels, which would be a little bit counterintuitive. Electric vehicles can also be made of recycled and biodegradable materials. So the Ford Focus Electric is an example of this. So really, as people become more and more conscious of the environment and climate change, and obviously to meet these global policy demands as well, we're seeing more and more growth in the electric vehicle market. And there's a few factors that are the key drivers behind this growth. So technology is the first factor I want to focus on, and the advancement in technology has been hugely important in driving the growth of electric vehicles. And that's because new batteries with better capacities are being developed each year. And these are batteries that can, go faster for longer. They can be recharged a lot quicker. And all of this helps remove people's objections to these electric vehicles. So obviously at the moment, the majority of cars you see on the road aren't electric. We haven't seen a huge mass take up of electric vehicles yet. But that's mainly because people do have these various reservations about them. Where can you charge them? How often will you have to charge them? How far can they go? All these different aspects. But now we are seeing that the barriers that stopped people using electric vehicles, like the price, the range, the charging availability, they are starting to diminish. So we are starting to see more and more out there. Now, I've also talked about how important policy is. And we are now starting to see more and more countries announce plans to phase out internal combustion engine vehicles. And I'll show you some of these specific policies in just a moment. Economics is another really important factor. And that's because it's expected that by the mid-2020s, that electric vehicles will actually reach price parity with internal combustion vehicles. And again, that's something I'll talk a bit more about in just a moment. We're also seeing more and more investment from different manufacturers of electric vehicles. So it's no longer just run by Tesla. A lot of the main automakers are in there as well. So the likes of BMW, Ford, Volkswagen, and many others as well. So there's really a lot of companies now that are focusing on the manufacturing of electric vehicles. And they've actually got policies in place around this as well. And of course, another really important factor is those declining prices of lithium-ion batteries, and that's what's driven by new technologies. But you can see that lithium-ion battery prices fell 87% between 2010 and 2019. And that's really significant in basically making electric vehicles cheap enough that the majority of people are able to use them and are able to afford them. So I mentioned policies from governments around the world ending those internal combustion vehicle engine sales. So this map just gives you a few examples of what different countries have in place. So if you look here, you can see the UK and India, both looking to end internal combustion engine vehicle sales by 2030. China is targeting electric vehicle sales penetration of 20% by 2025. Canada, Mexico, and Brazil all targeting 30% sales penetration of electric vehicles by 2030. And you can see there's a lot of other policies in place around the world too. And really importantly, all these policies have a limit within the next decade. So it's something they're really looking at changing quite rapidly. Now, one of the key reasons behind these policies is that roughly a third of today's greenhouse gas emissions come from the burning of fuel for different forms of transport. So if we are able to switch all this transport towards electric vehicles, that's going to have a huge impact on our global carbon emissions and is really going to help meet the goal of the Paris Agreement, where they're looking at really capping temperature increases to 2 degrees above pre-industrial levels. And actually, to reach that goal, transport emissions would need to be halved by 2040. So you can see that's why so many governments are now implementing these policies with that target of 2030. And just to give you an idea of how many electric vehicles we would need on the roads by 2040 to meet that goal, it would actually be around 900 million. So you can just see the potential scale of this industry if we are in fact able to meet all these global policy targets. Now, the other point I mentioned earlier was that electric vehicles are reaching price parity with gas-powered cars. So if we actually look at the total cost of ownership, and that factors in obviously your maintenance, your fuel, all those different things. But if you look at your total cost of ownership of an electric vehicle against just an average internal combustion engine car, you can see that we expect electric vehicles to reach price parity by 2023, so just 2 years' time. And you can actually see that it's expected that the price of electric vehicles will have halved between 2019 and 2023, which is a really rapid time for this to change so dramatically. So it obviously just shows how much the technology is changing and how quickly this market is developing. So obviously, in order to meet these government policy demands, there's forecast to be significant growth in the electric vehicle market. So by 2022, it's expected that there'll be more than 500 different models of electric vehicles available globally. And as we do start to see more manufacturers of electric vehicles, we will start to see increased competition. And with that increased competition, we can expect better technology and lower cost models to become available as well. So if we have a look back in 2019, electric vehicles represented only 2.7% of all new car sales globally. By 2025, this figure is expected to be over 10%. And by 2040, this number is expected to be at about 60%. And electric vehicles are expected to account for 30% of all passenger vehicles on the road by 2040. And more and more governments implementing policies around this. There is, of course, potential for these numbers to be even higher, especially if we do see any rapid developments and changes in the technology side, and bringing those costs down further as well. And this is just an interesting chart here from Deloitte that actually breaks these forecasts down by region. So you can see that the electric vehicle market share in China is expected to reach 50% by 2030. It's expected to be over 40% in Europe by 2030 and closer to about 30% in the US over that same time horizon. So you can just see how it's changing in different regions as well. It won't all be the same across the world. So a key element of electric vehicles at the moment is lithium-ion batteries. And whilst, of course, there are other technologies that are in the process of being developed, so far nothing has been found to be more effective and more cost-effective as well than lithium-ion batteries. So they do have really good high power to weight ratios. They're fast and easily recharged. They're not too expensive, and they can be recharged hundreds of times without any problems. They also have a pretty long lifespan, that's normally around 8 years, and they require really low maintenance. So obviously that helps bring down that total cost of ownership that I was talking about before. And if we look specifically at lithium, 79% of the cost of producing a lithium-ion battery is from those raw materials. So the cost of the raw materials actually accounts for 25% of the cost of manufacturing the Tesla Model 3. So you can see how significant these raw materials are and how much of a role they play in the battery technology market. And whilst lithium is relatively cheap to source, lithium-ion batteries do actually rely on other transition metals like cobalt and nickel at the moment, which can be a lot more expensive, particularly cobalt. So we're currently seeing most electric vehicle battery makers are now looking at different ways to reduce the amount of cobalt used in batteries, exploring different types of new technology that they can use instead, really just to continue to bring those costs down. So as we expect the demand for electric vehicles to rise over the next few decades, with that, of course, we expect the demand for lithium to increase significantly as well. Obviously, because it's that key component to the batteries there. Now, we have seen lithium prices fall in the past due to oversupply issues, but over the next 5 years, lithium production is expected to triple to meet the demands of the growing electric vehicle market. And if all these countries are going to meet their 2030 targets for phasing out internal combustion engine cars, we're going to really need to see a lot of demand for lithium to power all of these new electric vehicles. And as some of you may be aware, Australia has recently become the world's leading lithium producer, so supplying more than half of the global lithium production in 2019. And I'm sure you're all familiar with some of the miners involved in this, so the likes of Pilbara and Galaxy. And we do get questions about how much lithium there is in the world, and if there's enough out there to meet the demand from electric vehicles and new grid storage as well. So at the moment, the world's only actually producing a tiny fraction of our lithium reserves, and known global lithium reserves would be expected to last more than 200 years. So if you compare that to the few decades left of reserves of some of the fossil fuels, then it's obviously in a lot better of a position. And also, as new technologies are developed, then it may be that lithium is relied on a lot less in the future anyway. But you can see, at least for now, there are the reserves there to meet the growing demand that we do expect to see going forward. So just to recap then on the significance of battery technology and why we really see this as a long-term megatrend. So of course I mentioned how important the policies are. So global policies around climate change, and of course our increasing awareness of the environmental impact of fossil fuels as well, is all increasing that demand for renewable energy. Battery technology, of course, plays a key role in facilitating the use of this renewable energy, so it's vital in making wind and solar power reliable. So as the demand for these renewables grow, so too will the battery demand. And the same in the electric vehicle space, as the demand for electric vehicles grows, so too will the battery storage technology solutions. And new technologies are also increasing the efficiency of batteries, decreasing prices further as well, which again is just all leading to this increased demand. So how can you actually invest in and access the battery technology market? Well, at ETF Securities, we have the ETFs Battery Tech and Lithium ETF. So the ASX code for this fund is ACDC, and it is Australia's only ETF to provide exposure to the battery technology megatrend. So it really allows investors to access a diversified and a global portfolio relating to this theme of clean energy. And it's not just limited to lithium. So ACDC does provide exposure across the battery value supply chain to all different types of electrochemical storage producers and providers. And ACDC really then provides a nice low cost and easy way of accessing the battery technology market. So I mentioned that ACDC invests across this entire battery value supply chain. So I just wanted to highlight exactly what that captures. So it captures the raw materials, so obviously the actual mining and the chemicals, so the lithium miners there. It captures the manufacturing, so the processing of the materials, the cell and the pack. It captures the application side, so production and end use. So that would be some of the car users, for example, like BMW, who are using the battery technology in their vehicles. Captures emerging technology, so new storage technology and new applications. So this is obviously the development of new types of battery technology that's going to help bring down those costs and make way for the future of this market as well. And finally, we have enablers. So that's looking at recycling, inverters, different types of charging infrastructure, and the grid edge technology as well. And I will talk a bit more about exactly what some of these companies do just towards the end of the presentation. Now, this slide here just shows you how the methodology behind ACDC's index and how ACDC actually captures these battery technology companies. So ACDC tracks an index provided by Solactive, and this index is rebalanced on a semi-annual basis in May and November. And what happens at each rebalance is that for this technology side, so that the battery technology producers and providers, we use Clean Horizons database, and they're the world's sole consultancy dedicated to energy storage. And from this database, all energy storage technology manufacturers and energy storage technology providers are selected for the universe. And then companies that are classified as energy in their subsector are removed from the index. And that's really to provide a much more pure exposure to battery technology. And then from that universe, there are certain minimum market caps required and minimum liquidity requirements as well, just to make sure that the companies that we're investing in can easily be traded. Now, on the lithium mining side, companies have to be classified as a battery grade lithium producers. And that information is taken from the Fast Markets Metals Bulletin. And again, they have to meet those same market cap and liquidity requirements as well. Now, the fund is also equally weighted. So that's an important factor to note, is that at each semi-annual rebalance, this fund will be rebalanced back to the equal weight. So that's important really in providing that diversified approach to the theme. You're not just going to have one or two stocks that are dominating the whole portfolio. You're getting the broad exposure across that market. So this slide here just shows you the current holdings in the fund. So there's currently 31 companies in ACDC. Now, just a handful of these are the lithium miners. So you can see we do have Pilbara Minerals, Galaxy Resources, Mineral Resources in there. But the majority of these companies are on the battery technology side. So these are different sorts of battery technology producers and providers. They could be working in the electric vehicle space. They could also be working in the grid storage space. And they can be looking across different technologies as well. So these companies will be looking across lithium and all sorts of different battery technologies as well. So the likes of vanadium, zinc we've seen as well, and quite a few others. So this slide here looks back at the performance of ACDC. And as ACDC was launched here in 2018, I'm using the underlying index to show the returns over the last 5 years. And of course, it's important to note that past performance is not an indication of future performance. But if we take a look here, over the last 5 years, ACDC's index has returned over 23% per annum. And we've also seen significant growth in just the last 12 months of almost 60%. So 60% growth over the last year. And you can just see how much that spiked as well in November. And that was really off the news of Biden winning the US presidency. And there was obviously a lot of investor confidence in his policies around climate change. But as I said, there's been a lot of factors that came together last year: policy momentum, significant growth in the electric vehicle market, and more demand globally now for renewable energy, that have all come together to sort of really kick off the growth in this theme. Now, this recent strong performance has led to some questions around the valuations of these stocks. And so just in response to that, we wanted to highlight that ACDC is obviously aimed to be a long-term growth play. This is a mega trend where it's expected that the demand and the growth has the potential to accelerate over the next few decades. It's not just a short-term trading tool. And so for all those reasons I mentioned before as well, around the government and company policies, this changing consumer demand for clean energy, and also these disruptive technologies and the falling prices of this market, that's why it's led us to believe we're really only at the beginning stages of this clean energy shift. So we do expect long-term growth and long-term demand for the battery technology market. And to finish then, I wanted to highlight a few of the companies in ACDC's portfolio, just to give you an idea of exactly what these companies are doing in the battery technology space. But before I talk about those, I just wanted to highlight the geographic breakdown of ACDC. So you can see that it really is a globally diversified fund. And actually, while it is globally diversified, just a key thing to note as well, it's still domiciled in Australia. So you wouldn't be expected to fill in those WA-BEN tax forms for the US. And you can see just in the exposure here, there is quite heavy exposure towards Japan and the US. Australia, they're more on the mining side, but it's really quite diverse across Asia, Europe, and the US. So onto these company spotlights then. So the first company I want to look at is LG Chem. And they're actually the only chemistry-based company among the global battery cell manufacturers. And they were actually the first to mass produce lithium-ion batteries in Korea. And they have one of the leading market shares in electric vehicle batteries. So they supply some of the world's biggest car manufacturers, so the likes of Renault and Volkswagen. And they actually started their development of lithium-ion batteries back in 1995. So in 2009, they supplied the world's first lithium-ion batteries for those hybrid electric vehicles. In 2013, they developed the world's first hexagon-typed pouch battery, and those are used in smartwatches. And in 2018, they developed the world's first L-shaped battery. So they really are pioneers in this battery technology market. The next company I want to focus on is NGK Insulators. And this is a Japanese company which makes battery systems, insulators, and equipment. And they were actually responsible for the world's first commercialized battery storage system that was capable of megawatt electrical power storage. And as I mentioned, of course, ACDC covers all these different forms of battery technology. So I've included NGK Insulators here as one of those examples of a company that's looking outside of just lithium-ion batteries. So they're currently researching and developing zinc rechargeable batteries as well. And SolarEdge, so SolarEdge Technologies, they're a US domiciled manufacturer of energy technologies, and that includes power optimizers and solar inverters. But they've also produced the world's first electric vehicle charging inverter. And that actually has the ability to charge electric vehicles up to 2.5 times faster than current models. So that's obviously a really, really important factor in getting more consumers over the line on electric vehicles. If we can bring all these charging times and the costs and everything down, then you're going to get less and less objections to the use of electric vehicles, and they're going to be taken up a lot more quickly. So with that, I'll pass over for any questions. So you should see the little question box there. Please feel free to start typing those away. One question I'd like to start with that's actually come up quite a few times is what happens to the batteries after they've been used? Can lithium-ion batteries be recycled? So the answer is yes. The great thing about batteries is they can be recycled or repurposed for other uses. So at the moment, global policies tend to make the car makers or the manufacturers responsible for those expired batteries and their disposal. But currently, the recycling of the battery technology is quite an expensive process. But we're sort of getting to that point now where there's going to be more and more batteries out there coming from electric vehicles that are going to need to be recycled. So we are seeing a few companies out there that are specifically focused on the recycling of electric vehicle batteries. So they're looking at making that process more cost effective, really just to ensure that the batteries don't just create more waste. And then obviously that's a bit counterintuitive to the whole switch to electric vehicles anyway. And another question come through here, which is it just lithium-ion battery technology? So the answer there is no. There's, as I mentioned, there's a wide range of different battery technologies that can be involved in ACDC. So as these companies start to develop new forms of technology, it's very likely that we'll see these different battery types coming into the index and into the fund. And we already do have a few, as I mentioned in there, looking at different types of those technologies. So just having a look at some of these questions that come through here. So I'm getting some questions about hydrogen and whether hydrogen is included in the index. At this stage, I don't believe there's any hydrogen companies in ACDC. As I mentioned, it does use that Clean Horizon Energy to look at different forms of battery technology producers and providers. But at this stage, I don't believe any of the holders are currently investing in hydrogen. But that's not to say that it's necessarily screened out. And one of the questions here is about the growth of Tesla recently. So obviously Tesla has driven some of the growth in the portfolio over the last few months. We're all aware of how high that stock has run. That is one of the main reasons why ACDC is an equally weighted portfolio. It's to ensure that the growth across the portfolio is really spread out across different companies. So we're not putting all our eggs in that one basket. So Tesla at the moment, I believe, has about a 4.5% weight in that portfolio. That will, of course, be brought back down again in May when the fund rebalances back to equal weight. So it sort of diversifies that single stock risk by having that broader exposure and by having that equal weight exposure in there. There's a question about the tracking error between the ETF and ACDC's index. So that is relatively small. There'd just be minor tracking the error there, mainly from the fee difference. And just on the ACDC fee as well, if you've looked at in the past, you may have seen that the fund charges 0.69% per annum and previously did have the potential to charge expense recoveries up to 0.13 basis points. Those expense recoveries have actually now been removed from the fund. So all you'll see now on the fee side is just the 0.69% per annum. But what we can do is on the fact sheet, you can see the exact tracking error. So we can happily send that through to you. So there's a question here about, does ACDC have a dividend? The answer is yes, it does pay a dividend. Any dividends are passed on to the end investors. This dividend is relatively small, so obviously the fund is more targeted at growth rather than yield. I believe the dividend at the moment is around 2%, but again, all that information is available in the fact sheet, so we'll happily email that through to you there. And what we'll do, unfortunately, that's all we've got time for this today. We will, if there's any questions that I haven't got to, what I'll do is I'll go through those. I'll send you all an email tomorrow in response to anything we've missed. But thank you all very much for your time.